ultimately, I think all advanced civilizations will need to have an energy coin. Else we're just going to go through cycles of corruption and manipulation of the money, and then we blow up and start again and again. So
Hey everybody, welcome to the What is Money Show. I am thrilled to have you here joining me on my mission to help shine light on the corruption of money. Now, if this is your first time listening to the What is Money Show, I strongly recommend that you go back to episodes 1 through 9 first, which lays a lot of the groundwork for many of the concepts that we explore on the show. These first 9 episodes are my series with Michael Saylor, and thousands of people have told me that this is the best podcast series they've ever heard, hands down, and that it was instrumental to their understanding of money and Bitcoin. So if you're looking to start a deep dive into the nature of money, I don't think there's any place better that you can start other than episode 1 of this show. Now, a little bit about this show and how it makes money. The What is Money Show is 100% sponsor based. So all of our revenues are derived from direct sponsorships. And I strive to be very selective about the sponsors that I work with, specifically only using sponsors that I use personally, and also choosing sponsors that have values which are well aligned to the values expressed on this show, such as freedom, education, self-sovereignty, etc. So what I'm going to do now is a few ad reads right at the top of the show, and then I'll do a few more ad reads in the middle. And I hope you'll take the time to listen to them, as again, these are hand-selected sponsors, and I think you'll like what they have to offer. Today's podcast is brought to you by In Wolf's Clothing. Wolf is the first startup accelerator dedicated exclusively to the Bitcoin Lightning Network. 4 times per year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that help fuel the global adoption of Bitcoin. So go to wolfnyc.com to learn more about the program or apply. Again, that's Wolf NYC, WOLFNYC.com.
Willy Woo, welcome to the What is Money Show.
hey Robert, glad to be here. This is the first podcast I've done in quite a while. You know, I've taken a year off, and so glad to be back.
Glad to have you on and honored to be your first podcast in a year. There's definitely a lot to talk about in the Bitcoin universe. And just by way of quick introduction, you are a partner at Crest and SyzCrest FoF, and you're a well-known guy in the on-chain analytics world, really reading the Bitcoin time chain to get market signal. I think you were one of the first people to start doing that. And you've become very well known for that. So I wanted to, we're talking offline, I've been like reading through your Twitter, kind of structuring some of this conversation. And first thing that really jumped out at me, if we can start in the philosophical side before we get into the quantitative and macro stuff, you have a pinned tweet that says, money has always been a balance sheet of who owes whom. This accounting needs to be agreed upon, and there's only 3 known ways. 1, with social consensus, 2, with matter, 3, with energy. That's a pretty profound tweet about money, so I have to ask you, Willy, what does that mean? What is money?
Yeah, so if you think about money, I mean, Robert, you're one of the experts on this kind of deep thinking. It really is a ledger of who owns whom value, and so if you look at it historically, way back in the day, we used to use rare things like seashells and commodities that were rare, and so these are like examples of keeping track of value using a token. Maybe it's a lump of gold. And so all these things are in the physical realm. And so we're really relying on a scarce element. So basically atoms, chunks of matter that hopefully you find a commodity that is very, very hard to make more of. And gold was one of those, maybe silver as well. So we used matter as a form of keeping an honest ledger. And then we moved on to maybe some of the early tribes use social consensus, like, mana in New Zealand terms, effectively social respect and ranking. And in this fiat world, you could say that could be translated into political power and shaping belief and consensus to vote on who may be controlling the Fed or controlling the government, who then appoints the Fed and is in charge of the money printer. So you get this sort of system where people are now trying to shape belief or social political advantage. And also you could say even a proof of stake protocol is a bit like that, because you've got this crypto project that is, trying to convince everyone that this is decentralized, that everyone has a stake in it, and behind the scenes maybe it's a few whales or the crypto founding team that has a lot of the tokens that effectively control the consensus through that proof of stake mechanism. The transactions can be overridden by enough stake in that network. So again, that social consensus. And then, if you think about Bitcoin, it is really, the consensus is based on energy. If you're going to 51% attack the Bitcoin network, you will need to control 51% of the energy. Now, energy is a pretty hard thing to control, right? If you want to control, say, 50% of the available energy, that's intrinsically tied to the technology level of the civilization. There's a very, very strong correlation. In fact, technology is driven by energy. And, even for the cosmologists out there, there's the Kardashev scale, which is about how you can measure effectively the technology level of civilization from, say, the first level, I think, is really when you capture all the available energy of your planet. That's level 1. We're not there yet. And then all of the energy available from your star, right? And then the last one is you can capture all the available energy in your galaxy to harness it for your civilizations. So there, in terms of keeping an honest ledger, that's going to scale with the advancement of technology, whereas, say, using gold won't, because eventually you get off the planet and there's no limitation on gold as a scarce asset once you can mine, say, asteroid, and that's not far away, actually. And so on that view, it is a very defensible way of keeping a fair ledger. You could also say there's a very, very strong correlation between energy and effectively GDP. So, the whole economy runs on energy. So on one side of the equation, you have the economy, like maybe $100 trillion. And the other side of it is really the money we trade for that. And to control money and take, effectively unfair advantage of it, you would need to, if it was an energy coin like Bitcoin, you would need to control half of the world's energy. So as the GDP scales, again, your money is also very, very robust against that scaling. So ultimately, I think all advanced civilizations will need to have an energy coin. Else we're just going to go through cycles of corruption and manipulation of the money, and then we blow up and start again and again. So I thought it was a relatively, I too thought it was relatively profound to stumble on that. I wasn't just the only, it was really borrowing and ripping off of other people as well to get to this conclusion. And I thought it was very profound, but actually it wasn't very well received on Twitter. Normally we tweet something, it's like, wow, it goes off or doesn't. And certainly that one, I don't think people really saw how important that is in the long scheme of things, or how important an energy coin is to civilization.
Yeah, no, well, maybe it landed wrong with your audience, but I think it will land well with mine. We do a lot of these philosophical waxing about the nature of money, and I thought this was a really good one. You highlighted one point. We've often described money as like a system for trading favors, which is exactly what you're saying here, right? Like a balance sheet of who owes whom. But and so it's, in that sense, it's a social construct, right? We've just created this list of like who rendered what favors to who, what was valuable, and then whoever has that money can then go and get favors from other people in the form of goods or services. So it's this accounting system for human cooperation, very much a social construct like English or the calendar or, civil liberties, like things that we just kind of make up to live by, or things that we use, these abstract tools. But the weird thing about money is that it can't just be abstract. I mean, it can, like that's sort of what fiat is, but when you unroot it from physics, well, you get fiat currency, right? People manipulate it, corrupt it, hyperinflate it. It needs some type of anchoring into physical reality, because physical reality, we have real constraints, like the time and energy necessary to produce goods and services. So I think it's a unique this is maybe why it's so interesting to talk about in this context. It's the only social construct, I think, that has to be rooted in physical reality, whereas all of our other social constructs are just abstract, English, whatever it may be. And so I think when you get that framing, you see why Bitcoin is so unique, right? And proof of work is indispensable, that you have to have energy expenditure to have integrity of the money supply such that you don't get corrupted, manipulated, et cetera, et cetera.
Yeah, it's particularly interesting because it is a real physically based money, in that it physically is in its physics, yet it's a digital currency. And so what Satoshi worked out is how to bridge the physics realm into a digital realm.
Yes.
Like, there's no other way that we so far do, is there? There's no other way that we know of that can digitize a physical world asset or value, like energy, into the digital realm. Every other way requires some sort of oracle, some sort of person that witnesses it and says, yes, it is so I'm putting it into the digital realm, tick.
Yes.
No one's figured that problem out apart from Satoshi using energy. So, yeah.
Yeah, and I think it also speaks to Bitcoin being irreproducible, right? You can't do this again. You can have other proof of work coins, but money has this kind of winner take all network effect, that the larger and more liquid the money is, the more useful it is. So this bridge that Satoshi created between digital and physical reality, I think is the only one that's ever going to matter. Like
that's an interesting one, because is that true though? Is it always winner take all? Usually there's a handful of competing. Like right now we have US dollar and euro, and I do think if the markets are set free, there's usually a handful, and I think that's another thing that I think maybe Bitcoiners get wrong. If we're talking about maximalism at its original sense of it, is that we believe that there's particularly one coin to rule them all, one that's going to take up the lion's share. But actually, that in itself is not ideal. Like, you do want competing currencies, because one might fail. In the fiat world or the nation state world, countries go out of power and so forth. In the digital world, there are definitely bugs that can rise and vulnerabilities, and I would like to see a world of strong competing currencies, just because that decentralizes the monetary base. If we were very centralized onto one coin, let's call it Bitcoin, we've got all our eggs in one basket if that actually fails. And people have this notion that Bitcoin's the perfect money. It's certainly got a lot of promise and certainly got a lot of the design right, but it's certainly not perfect. You know, we've seen inflation bugs rear up and they were caught in time. Thank God. There's all manner of design issues if you talk to the core devs that, you know, they work with, and through the decade they've fixed and improved. And so by no means is it the perfect currency. And so yeah, I'd just like to put that out there. It would be good to see strong competing fair currencies.
Yeah, I lean more to the maximalist camp on this, just in the sense that it's not so much looking at fiat currencies as an example, because they're not free market phenomena. For me, it's more like looking at gold, like the world sort of standardized to one free market money because gold was basically the best monetary technology we had, and it's the deepest and most liquid market, et cetera, et cetera. So I think things will develop more along that path. I don't disagree. Like, sure, it's should be free. Anyone can introduce whatever they want and try to compete with Bitcoin or anything else. But I just think over time, the world would standardize to one digital gold, just like we had one analog gold, effectively. But it's to be seen, right? It's just speculation, because who knows? We've never seen anything like this. I do think it's interesting, though, the point you were making on energy, talking about the Kardashev scale too, that Bitcoin also acts as like this incentive system to just go out and find new, cheaper, previously uneconomic energy sources that you couldn't monetize effectively. And now Bitcoin's like a bounty program or something for that globally forever. And so if it's driving us towards cheaper and new energy sources, then what does that mean for the advancement of civilization? As you were saying, the Kardashev scale is basically saying the more energy you harness, the more civilized you are, effectively. And so Bitcoin's like again, a bounty program or an incentive system that pushes us up the Kardashev scale, perhaps. I think that's really interesting to think about.
Yeah, it's got a lot of these unexpected results where, the old way of looking at it, particularly by the media, is it's so energy hungry. It's so energy hungry and it's damaging on the environment. But if you look at it in terms of the Kardashev scale, actually, we want to use more energy.
Yeah.
The more energy we unlock, the better society gets, the more comforts we have, the more amazing things we can do. We can explore the star systems. And to that front, we're looking, just even with my friend Daniel Batten, who's leading some of the ESG research, like we came to the conclusion Bitcoin doesn't use enough energy. Like, for example, if we really want to accelerate next generation renewables like solar, we could have, solar panels every roof across even projects that have like turned the roads into solar panels. It turns out that it's really, really hard to approve these renewables, wins in this category as well, into the grid, because the grid is really an older way of transmitting power, and it needs a complete baseload. You're going to match what the draw is with the inputs. And what do you do when you're oversupplied or undersupplied? And so feeding these renewable energy sources into the grid is wreaking havoc with the grid. And so Bitcoin miners there are now being able to absorb the extra load, where normally the grid's having to pay people to use that power.
Right.
And they're able to flexibly just turn off those miners when there's a critical shortage. And so if we want more renewables and a decentralized grid where people have got solar panels on every roof and so forth, we need more Bitcoin miners that are capable of absorbing and really being the sponge and absorbing the excess and then turning off. So that's an example of where it's pushing forward the energy infrastructure of our planet.
Yeah.
Yeah.
Yeah, it's almost like more than money at that point, right? It's so fascinating.
If you are a business owner or manager, you should know these three numbers: 36,000, 25, and 1. 36,000 is the number of businesses that have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, which allows you to streamline accounting, financial management, human resources, and more. NetSuite turns 25 years old this year. That's 25 years of helping businesses do more with less, close their books in days rather than weeks, and to drive down cost. And finally, 1, because your business is one of a kind. So with NetSuite, you get a customized solution for all your key performance indicators in one efficient system with one source of truth. NetSuite is everything you need all in one place. Right now, you can download NetSuite's popular KPI checklist designed to give you consistently excellent performance absolutely free at netsuite.com/whatismoney. That's netsuite.com/whatismoney to get your free KPI checklist. Again, netsuite.com/whatismoney. Now I'd like to tell you about our sponsor, iCoin Technology. iCoin has just released a sleek new hardware wallet. Looks like a mini iPhone, a little touch screen and camera on it. The device has no Wi-Fi, no cellular connection, no GPS. It's a strictly physically cold hardware wallet. Like I said, it's got a high-res 3-inch touchscreen. It's got a camera for air gapping the wallet. It's got optional Bluetooth compatibility. And it's really a brand new UI, UX experience for a hardware wallet, making it very accessible, easy to use, not intimidating. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like iCoin Wallet to truly own your Bitcoin. Go to iCointechnology.com today and use promo code Bitcoin23 for 30% off of this new sleek hardware wallet.
Okay. Pivoting now, you had a tweet. You've talked, obviously, done a lot of work in explaining futures markets, talking about paper Bitcoin markets, which, this is what Bitcoin is on exchange, and then exchanges are sort of overissuing these Bitcoin IOUs. How does, what do we call this? Bitcoin derivatives market, paper Bitcoin market, whatever you want to call it. How does this impact Bitcoin's bear and bull cycles, or just Bitcoin price more generally? People get really concerned about this, often thinking that, too much paper Bitcoin suppresses the price. So how do those dynamics play out in your view?
Okay, so, let's go back on first principles and answer the question for the audience. Well, what is a synthetic or a paper Bitcoin? And so, when we have markets, we can trade the underlying, right? I want to buy a Bitcoin. I'll sell you my US dollars. I'll get the Bitcoin. And we call these spot markets. So, I want a barrel of oil. Here's the money, and that's a barrel of oil. I can settle in it. And then, we've got these things called a futures contract. In the Bitcoin world or the crypto world, we have standard futures contracts, and we also have our own kind of invention. BitMEX invented this in 2016 or even earlier. And it was the perpetual swap. So we've got these two types of derivatives called futures instruments. And what they are effectively bets on the direction of Bitcoin price. So if I want to take a long bet on Bitcoin, I can buy a long position in the market. And of course, I can't actually bet on a long, like the price going up, without someone taking the other side of that bet. So they're taking, we do a handshake, click of a mouse button, someone executes, and we have done a bet. I bet on it going up, and Robert, you might be betting on it going down, or vice versa. So if that's a contract for one Bitcoin, we have now just created a synthetic Bitcoin. The reason why it's just a bet, right? Okay. But actually myself, I didn't actually buy the Bitcoin. I bought exposure to Bitcoin price going up. And so it is the same as minting a new synthetic Bitcoin. And very much so, I could tell you that hedge funds, institutions, even the New Zealand retirement savings fund at one point got access to Bitcoin. And I believe that may have been through the CME futures. Like, these institutions aren't able to, because they're fiduciaries, they aren't allowed to hold the Bitcoins themselves. There's checks and balances. So they need, if they're buying Bitcoin, they would need a custodian. It need to be regulated. There's a whole lot of issues buying Bitcoin currently because the setup, right? The regulated products aren't there for these institutions. So what do? They buy maybe the futures ETF. So I'm buying an ETF that tracks Bitcoin, but actually underlying that, they're trading these paper currencies. So they're basically putting a long position on Bitcoin without actually buying the Bitcoin. And so one of the things I did was actually on the tail end of the bull market last in 2021, early 2022, I could see through on-chain analysis that all the coins were still being built up and taken off exchanges. And those coins were going from liquid holdings to illiquid. You can detect that because you can look into those wallets and you could look at the patterns of those coins moving and the holder, you can monitor their past transactions. And so you can see that the coins were moving into strong hands, effectively investors that were stacking their Bitcoins, and they were not being sold. So that was the pattern all through 2022's bear market, as in effect, a supply shock was being created. Right. But actually, and I was one of those that said, actually, the price is going to go up, but it didn't, right? Within, by I think around February or so forth, I realized that the bear market was actually settling in, and actually the signal I was getting on chain, which was a supply shock, a bullish movement, was not was not a true signal. The price kept coming down. What was happening was people were hedging out on the futures market. So instead of selling that Bitcoin, you could just keep the Bitcoin and short it, put a short position on it. And so if you did that, just through the dynamics of how the funding on futures happen, like it's not free to effectively trade on these futures markets, and effectively more people want to go long than short. So effectively, if you short the market, you get paid. So instead of selling my Bitcoin, I'm better off to hold my Bitcoin and I'll short it. And so now I'm effectively hedged out as if I sold it. It's like now effectively whatever the price I shorted at is what I got in US dollar terms, and now I'm being paid a funding rate. I'm collecting funding, and that was the better way of doing it. So the market actually sold off, but through the futures market, and that actually minted a lot of synthetic Bitcoins. And I only just recently did the modeling around that, and it shows that the total supply of tradable Bitcoins was gradually climbing all the way through the bear market. Like, even though more Bitcoins were being bought and taken off the exchanges, the synthetic Bitcoins were taking its place. And actually, when did that tradable Bitcoin start dropping? It was right at the bottom of the market. Eventually, those short positions unwound, those synthetic Bitcoins vaporized, that you unwind the trade and that bet is off. And effectively, the tradable supply of Bitcoin plummeted, and that was the bottom of the market. And effectively, that supply has been dropping more or less ever since. So actually, the long term, we are actually in a good position here with the supply dropping. That's the real Bitcoin and the paper Bitcoin. But yeah, that's what's happening. And if we were to look at what's happening with in terms of the ETFs, I believe do you remember, Robert, was it 2015? Was it 2014? When were the first spot ETFs applied for? I think
I don't know the answer to that question, and that's a little before my time. I started in like 2016.
Oh yeah, okay. So definitely in 2016, I was doing analysis on the spot ETF. The Winklevoss twins had one. SolidX Partners had one. They were all denied, or delayed, and then delayed. So we're talking 7 years or maybe more that these spot ETFs were denied. Back then, it was like, it's not safe for retail because it's too volatile. And then more recently, we had futures ETFs get the tick. We had the CME come in late 2017 and get the tick, trading the futures contracts. And then we had the ETFs built on top of that. And so now for a few years, we've had futures ETFs. But for 7 or more years, the spot ETF has been denied. And what that has created is basically an impediment to development of the spot markets, having liquidity, volume, having dominance in these markets. So the dominance has gone to the futures markets. They trade maybe 5 to 10 times more volume in a day. The liquidity is there, and so now when the price moves in these futures markets, spot follows more than the other way around. Not always the case, but the futures market is very, very strong now. So we're in a regime now where very large institutions can come in and effectively have a dominance over the price of Bitcoin. Like, if you were to look at all the spot Bitcoin that is sitting on exchanges that could be bought at today's price, $60 billion would buy it all up, and there'd be no more Bitcoin on exchanges to buy. And you can contrast that with what does $60 billion mean to financial institutions, the banking sector? Well, there's over $20 trillion of M2 money in supply. With futures markets, I don't need to have Bitcoin to participate, right? If there's, say, $60 billion of money needed, if I was to buy it all at once at today's price, I'd get all of them. I could, given you can leverage futures, I could do maybe 5x leverage. So every spot Bitcoin that is bought and taken off the exchange, I can actually just front some US dollars into these markets and short Bitcoin. And so $60 billion turns into $12 billion in terms of collateral I need to effectively balance out that buy pressure. And so I was saying, remember George Soros, how he broke the Bank of England? It was a really good trade, and a whole bunch of hedge funds piled into it. And, you've got trade here that can make multiple billions of dollars in that single trade. There's not a lot of trades you can do as a multi-billion dollar hedge fund that can get a return and carry that kind of capital. But in the Bitcoin world, now that we've got the futures, markets very liquid, I could plant, say, $12 billion if I wanted to into these exchanges and effectively halt all price going up, right? So whenever people get bullish, I just short it and I capture a yield, right? Whenever I sell, I get a little bit of price premium. And so I'm actually capturing a yield while suppressing the price of Bitcoin, basically feeding in short. So as everyone's buying these Bitcoins and everyone thinking it's going to go to the moon, saw this all through 2022, they're bought, taken off exchanges, shorts were loading in, price kept going down. That's one thing. You're incentivized by laying down those shorts to capture that yield. Normal case for a small trader, when you short, you cover by buying one Bitcoin so you're not exposed to the market. But heck, if I am like a Soros-size hedge fund, I don't need to cover. I know I've got enough collateral there to just keep the market down while I'm collecting that yield. And even more so, I could actually do this thing called a long squeeze, basically keep selling. It's expensive to do that because often the funding rate swings against you and you have to pay now to be in that position. But you can long squeeze. Basically, anyone going long gets liquidated because it gets below their liquidation price. Suddenly, they get liquidated and all the sales, everything they bought gets dumped on the market and gets worked down. And then you'd cover, right? As the hedge fund that pushed it down, I'll just cover and capture that. And turns out you make 10 to 100 times more money than just capturing that yield. You cover, the price rises, and you just continue to milk it. So it strikes me as with these futures markets, you're in a position where very large multi-billion-dollar hedge funds are now incentivized to suppress the Bitcoin price. That's a very good payday just to keep it down. And these dynamics exist. There's the thought Bitcoiners think we can it's a sovereign money, we control it, we can send it where we want, but the weakness is that for Bitcoin to be useful, sure, we have sovereignty, we hold it, we can send it, no one can stop that. But if the coin does not have a market value, there's no point, right? You're transmitting value, but there's no discoverable value on it. Or if the value discovery mechanism is now being suppressed such that Bitcoin's always going to hang around, the 30,000 mark, it doesn't get large enough to be world changing. Maybe it's somewhat impactful for a small nation state like El Salvador and that size economy, but certainly it's going to hold back its impact worldwide. And so this is the issue I see with Bitcoin right now. And even if all the Bitcoiners came in and bought all the coins off the exchanges, the price doesn't get unleashed if the futures market continues to have dominance over the spot markets. And this is why it's so important to have this.
Yeah, that's what I wanted to ask. So it's the significance of the Bitcoin spot ETF. Is this sort of reining in the dominance of the futures market? And then what does that lead to? If I'm hearing you correctly, the futures market is sort of perhaps exacerbating the long-term volatility of Bitcoin on these long squeezes, short squeezes, et cetera, but maybe in the short run, dampening the volatility?
Yeah, I think that's what we have seen. The volatility has been damped because the upside movements have been muted. You can see it. I can just see it in front of me with the chart. We used to have these exponential runaway tops, reflexive sort of curves, we call it, and they just sort of scream up because, there's no one that's selling into that. But now, you can sell because you don't need Bitcoin to sell it because you sell it through the futures market. And you saw that last bull market was very muted. It didn't scream up any. We thought it would walk out 100,000 or it just got muted, and then got muted again. It was all through the futures market. And so if you think about that and the spot markets, which one has dominance? We need spot to be more dominant. If the liquidity in futures market is a little bit smaller, then people go to the spot markets. In fact, people that want to buy Bitcoin exposure, even an institution has to buy it through an ETF. You would hands down buy a spot ETF over a futures ETF because you have to pay that funding rate. And so it's like 10%, maybe 20% in a bull market. It's how much you have to pay per year of your holdings just to stay in that position. And so everyone would go to the spot ETF if you're a long-term investor, and that would then reinvigorate the spot markets. So yeah, it's very, very important. I'm not saying that solves the problem completely, because historically futures markets continue to develop very deep liquidity. But yeah,
but it's truing up price discovery for Bitcoin in a way, just by getting a spot ETF to sort of balance out the dominance of the futures markets.
yeah, I would say so. Like, typically when you have, like if we look at it this way, the market price of any asset, let's call it Bitcoin for this one, the market price is determined by two activities, right? There's a long-term activity based on investor demand and the market willing to supply that. So there's demand and supply, and this price discovery happens. And then in the short term, it's like a random walk, and it looks very, very irrational, and it's not about an efficient, the market's efficiently pricing and everything. What the market is actually doing is taking the most efficient path to liquidate the most traders. I mean, because in the short term, it is really dominated by short-term trading, and the vehicle of choice is very much futures because the liquidity is there. It's very nimble. You can buy a huge amount of it, even if it's not on offer on the spot markets. And so you'll see it. Like I used to say in 2018, the price of Bitcoin is determined by the random walk of the path that liquidates the most traders on BitMEX. And that's very much the case now across all futures markets. If the market's overly long, then you'll find that it comes back down because there's so much money in taking those traders out. And so you get this sort of noise, right? But right now what we've got is long-term investors getting long-term exposures through the futures market when they should be in the spot market, which is much more of a rational market because it's for longer-term investment. I hope that kind of makes sense.
Yeah, no, it does.
Now I'd like to tell you about our sponsor, CrowdHealth. CrowdHealth is a Bitcoin-enabled alternative to legacy health insurance. Now let's face it, legacy health insurance is an absolute scam. Nobody can explain this better than the legendary comedian Chris Rock.
Insurance. You got to have some insurance. You got to. There's an insurance. They shouldn't even call it insurance. They should just call it in case shit. Like, I give a company some money in case shit happens. Now, if shit don't happen, shouldn't I get my money back?
So with CrowdHealth, instead of just paying premiums that you'll never see again, you can hold part of this pool of savings in dollars and in Bitcoin through CrowdHealth. And when you have a health event, you can draw against this pool of communal savings. So go to joincrowdhealth.com/breedlove to learn more or sign up. Now I'd like to tell you about our sponsor, Wasabi Wallet. With Wasabi Wallet, you can receive, send, and store Bitcoin privately. In Wasabi Wallet, your transaction history and wallet balance are completely hidden. Wasabi Wallet is easy to use. All of its privacy features are built in by default, and it works with any amount of Bitcoin. Wasabi users can make CoinJoin transactions together with BTC Pay server users or Trezor Suite users. For BTC Pay server users, they can make payments directly inside of a CoinJoin, and for Trezor Suite users, you can make CoinJoins directly on a hardware wallet. These features result in fee savings and security improvements for both sets of users. So go to wasabiwallet.io today to download the state-of-the-art Bitcoin privacy wallet.
Where are we then now? So we don't have a spot ETF. So we still have futures markets kind of doing their thing, I suppose. From a macro standpoint, I know this is a very dangerous question. I want to ask you about like Bitcoin short-term price. Obviously, U.S. dollar has been getting stronger amid a lot of macroeconomic uncertainty, kind of a generalized flight to safety, it seems like, as rates have gone up and all of these things, obviously people moving into treasuries, et cetera. Well, what does that mean for Bitcoin? Like, where do you see Bitcoin? We've got the halving in less than a year. I don't know to what effect you think that influences price or not. What is your short, say, 12 to 24 month outlook on Bitcoin in the context of our current macroeconomic situation?
Yeah, so Bitcoin is very much developed into a very macro correlated asset. I think back in the day, maybe in 2017 or so, 2018, we were talking about this as a very uncorrelated asset. Now it's highly correlated as a risk-on asset. And so what's driving the price of Bitcoin is the US dollar strength, effectively liquidity in the system. And, we just had another rates announcement, which was not to cut, and sentiment that we might be another bump. So that's creating headwinds. But in terms of the US dollar strength, it is really getting quite high and up against resistance. And so we need that to turn around before we get an opportunity for Bitcoin to rise. And people have varied opinions on it. I think potentially if the rate's lower, if the US dollar drops a bit, we have a window to go later on this year, maybe fourth quarter, first quarter of next year, to rise higher. But my personal belief is that there's a lot of weakness in the global economy, and that we are in a recession and we'll go deep into a recession. And generally when that type of stuff happens, I think it's really hard for us to rip upwards in all these risk markets. And maybe if we do sort of, into next year get a hard time, blood on the streets, and the money printers kick in again, that may open the door for a proper bullish run into 2025. Interestingly, it coincides with halving. I was on record the last cycle saying this might be the last cycle in the last cycle. And I painted a chart of basically these big strong cycles going into these kind of random walk cycles. And I though we have a bear cycle and though maybe we're setting up for another bull cycle, I think the interesting thing is global liquidity cycles of where is all this money coming from to buy Bitcoins. It turns out global liquidity is on our 4-year cycle and it is superimposed on the halving. So what I think is happening is that Bitcoin cycles is two effects. It's the internal demand and supply coming from our halving supply shocks. It's superimposed onto these liquidity cycles. And I think that we've pretty much exhausted strong impulses from the halving. I think the next halving, which drops our inflation rate to below that of gold, that impact is not as strong as prior. Furthermore, you've got these other impacts. The impact of fees harvesting, exchanges harvest fees, right? You're trading crypto, you're trading Bitcoin, and they make their money in the crypto that they're trading with Bitcoin. They often take, on one side they take the Bitcoin as fees. And so their operations, they've got salaries to pay, so they sell those Bitcoins into cash to pay the operational expenses. So as the trading volume, particularly these futures markets, man, they're multi-billion dollars a day of volume, they pale. The spot markets pale in comparison to it. So you've got all this huge churn of trading generating fees in Bitcoin, and some of that is sold off. And I worked out in the last cycle that during a bull market that equaled effectively the reduction in the mining halving. And so I think in this next halving, actually the fees harvesting from exchanges is now going to be more dominant than the halving from the supply shock of half the supply being emitted. So I do think that has less and less impact, and actually we're in a world now where it's traded like another macro asset, one that's still gaining its legs, but very much driven by liquidity in the system. And that leads me to one last point, where if you were to track Sharpe Ratio, which is a measure of effectively risk-adjusted return, and you can calculate that over 4 years. So you can net out, where you are in a cycle. You just calculate Sharpe over 4 years and look quite stable, actually. It hung around, I believe it was high threes. That's pretty good. High threes gets you, no, looking at it now, at 3, sorry, it's around about high twos. That was heads and shoulders above every other macro asset, S&P 500, gold, bonds, emerging currencies. It was just heads and shoulders above everything else, because this was a network that was undergoing exponential adoption. And I would say that adoption is still happening. But the interesting thing that happened 2021-ish, right? In 2021, it just fell off a cliff, one step change down. Now it's in the zone of around 1.5, 1.75. So we're in the zone now where the risk-adjusted return of Bitcoin is competing head-to-head with that of the S&P 500, that of gold and bonds. It's now dropped into the zone that all the other macro assets have that are trading in risk-adjusted returns. And actually, again, I would say what happened in 2021, that's a mainstream adoption of futures markets. It's just another macro traded asset right now, even though it's,
Sorry to interrupt. Does this lead to the short squeeze of the century?
It could do if futures markets dwindle in liquidity and futures and spot markets start to dominate. It absolutely could do. Also, the other path would be an absolute collapse and mayhem in the world, and a collapse of, say, Fiat.
Right. That's what I was thinking.
Yeah,
the printing process is like a demand driver behind all this futures market price suppression. At some point, you might just get the spark that lights the forest fire kind of thing, and just see a absurd short squeeze on Bitcoin.
Certainly possible. If the markets cease to work properly, like the financialization of these futures markets, derivatives, and the drivers decide Fiat, how that's built, for sure. Yeah, I mean, Bitcoin is very patient. Given long enough, we know that the fiat regimes collapse. Not sure if markets collapse; they usually survive. But yeah, I have no insight. Yeah,
interesting to think about. Maybe a nice dose of hopium for people.
Yeah.
Well, man, I think I've kept you long enough today. I really appreciate your insights. This is all super interesting. It's fun to get inside your mind and see Bitcoin and markets through your eyes. Where can people find you on the internet?
Okay, best is my Twitter, which is Woonomic handle. I'm not that active these days, but I pop in every now and then when I post something here and there. My day job is running fund Crest and SyzCrest. So, like, you may go to our website, crest.fund. What we do is we build investable products from the crypto market. So effectively harnessing all the efficiency out of the crypto markets, and we can generate 2 to 3 times more than even in this regime over treasury bills. So anyway, that's what I do as a day job. But find me on Twitter at Woonomic is the best.
Awesome. Willy, thank you so much for doing this.
No problems. Thank you. Enjoyed it, Robert. You have a good one.